Trading was difficult for me until I understood top-down analytics in a different way. And in this video, I will show you how you can do it using your mobile phone only. You don't need the PC, you just need your mobile phone. What is top-down analysis? Top-down analysis does not matter if you are a scalper, if you are an intraday trader or swing trader, an investor or hedge fund trader. So top-down analysis is what you use to get the general bias of the market, particularly for the week or in a specific day. So this top-down analysis will give you confidence by using a higher time frame, which I'm going to explain later on this video, and also it will give you sniper entries to tighten your risk and massive reward. Also give you a clear picture of overall markets and also give you conviction in your trade ideas. It will help you to understand your trade ideas if you have a strong bias on this top-down analysis. So next, this is time frame analysis. Time frame analysis is where you go from one time frame to another to analyze and get the clear picture on this top-down analysis. So time frame analysis is you go from the higher time frame to determine the bias, which can be the weekly, the daily, and also the 4 hours time frame. And we also have the median time frame, which is the time frame where you have our narrative and our setup, which I will also show you in this video, which is either 1 hour, 30 minutes, or 15 minutes. I personally use 15 minutes on my narrative and setup. Then we go to the last one, which is lower time frame entry, which can be the 5 minutes, 3 minutes, and 1 minute. Most times I use the 1 minute and the 5 minutes personally, depending on the particular trade, to catch a sniper entry. Then go to your phone, go to trading view, tap your trading view on your phone, then select the pair that you want to use for analyzing. Then rotate your phone. Such your phone we have another shape. Rotate your phone like this to the wide angle. Rotate your phone. Then first of all, we start from daily time frame. I'm using US 500 on this trade as example. You go to daily time frame like this. So as you can see on daily time frame, we already on buying bias. Why? We start from this place. We have break of structure here, and also we have another break of structure here. So this shows that at least you're looking for buying bias. So what you can see that we have another break of structure here. We have another break of structure here, as you can see. So here now become the low, the strong low, which is here. Here now become the strong low. Here become the strong, which is the low that push the market into further shift. So we will now go to 4 hours time frame. Same chart. We go to 4 hours time frame like this, and you can see already we have a change of character. This is the leg. You can see this is the structure, and we have a change of character here. This is a break of structure here, and we have a change of character here on these 4 hours. So coming on this particular day, which is the next day, this was on Monday, 5th January 2026. We know that we have a change of character, and we have a PDRA, which is your point of interest or key levels, anything you want to call it either. So this PDRA, we have a fair value gap here, which you can see. We have a fair value gap here. So let me mark the fair value gap like this. I'm using my phone, so I want to just how you can do your top-down analysis very easily. We have a fair value gap here. So the next day you wait for this wait for the market to return to the fair value gap. That is where you come for patience. So we now go down to the 15 minutes time frame. We go down to the 15 minute time frame on the same charts. So this is a 15 minute time frame. So this is a 15 minute time frame, and what you can see is that on this 15 minute time frame we have a BOS here. We have a BOS here, which is break of structure, and we now have a sharp change of character here, which we have already marked out on our 4 hours. So we have a sharp change of character here. That means on this day we'll be looking for buying opportunity. So this fair value gap we marked on the 4 hours. This fair value gap we marked on 4 hours, And if you check on 15 minutes also, we also have another fair value gap. So I will turn on my indicator, my session indicator, because I trade based on session. So we will use power of 3 and add up on this. This is my session indicator, then this is my session indicator. So what you can see is that on this particular day, this is a fair value gap on 4 hours. Then we wait because we know that okay, our bias now is buying bias, and we're looking for market to make its highest high or buy on that particular day. So this was Asia session here, this was Asia session here, and what you can see that the Asia session accumulates more, and during the London session we have a sweep of this Asia session like this. We have the sweep of this Asia session like this. Then let me cut this in close. Then what you can see is that London session sweep the Asia session with massive momentum, which you can see we have a sharp sweep of liquidity targeting the Asia session low. So once I have this sweep, how I enter is that I use what we call bullish market bias, like bullish market confirmation. If you're looking for sell, you're using bearish market confirmation after our sweep. So you can see we have a sweep here intended on that directional bias, which is we're looking for buy. Then on this London session we enter at the market's bullish candle, and you can see what the bullish candle here is, an engulfing bullish candle here, but does not matter the type of candle it is. Once the bullish candle, then we enter at the candle closure like this. We enter the candle closure, then we keep our stop loss at the liquidity sweep, which is the low of the day. Then we target the previous day high, which is here, which is 1:3. We target the previous day high. So for me, our advice for you to choose a minimum reward ratio. So for me, I normally use 1:4 or 1:3. So on this particular day, I can see this high is a liquidity, which is 1:3 for me, and you can see it hit TP and also continue more than 1:3. So this is for buying bias, and this is how you can use your phone to analyze and get this type of trade. I'm not using system now. So let's go to the next trade. We use the same process, which is first of all our daily time frame. So what you can see here is our daily time. So what you can see here on our daily time frame is on the same time we have this high, and this high is an equal high, and we also have a fair value gap here, which means this is another drawn of internal liquidity that market need to retrace. This is on daily time frame that market need to retrace. So it's not for me to go back to the, just assume that that this particular market here, just assume that from here have not occurred. Assume that from here have not occurred, from this side have not occurred. So have that in mind that you have not occurred. Let me show you how you can carry that kind of trade. So secondly, we go to 4-hour time frame. So we go to 4-hour time frame, and you can see this is same fair value gap we mark on our daily time frame. So let's assume that here is where the market is, which I told you to assume. So what you can see there is that we have a change of character here. We have a clean change of character here on our 4-hour time frame. This is a clean change of character after this break of session, and we also have another change of character here, which is from here. So what you can see, just assume that you are not seeing this area. What you can see is that we have a fair value gap here on this candle after this change of character, because that is where we catch the trade. We have a change of character and we have a fair value gap there. So I mark the fair value gap. I know that okay, the next day if this market can return to this fair value gap, I'm looking for sale. So let's go to the 15 minutes time frame. This is on 15 minutes, and you can see this is the fair value gap we mark on the 4 hours, and this is the break of short like this, which you can see clearly. Even on 15 minutes we have that change with that break of short like this. Then on this fair value gap we wait for the next day to return to this favorite gap, as you can see. So what happened there is that I will turn on my session indicator, and what you can see that during the Asia session here, we accumulate small and distribute, and the London session personally accumulates, as you can see here. The London session accumulates here, and we have that sweep of London and Asia session towards the favorite gap. So we know that, okay, now we are ready for the market. And you can see, remember our confirmation and our entry. So our confirmation is this bullish candle, our confirmation is this bearish candle closure. As you can see, we have that bearish candle closure, and despite the type of bearish candle, as you can see here. So we wait for the market this bearish candle to close, and we enter immediately. Then we put our stop loss above the sweep of that liquidity, which is that candle closure, and we target the next run of liquidity, which is this London low. As you can see, it gives us 1:6. As you can see, give us 1:6, but I personally used to target 1:4, and which you can see here, this is where I close I close it here. This is 1:4, but you can also target the nearest bullet, which is here, and which is advisable also. So this is another trade setup. As you can see, I'm not trying to frame anything. This is how you can use top analysis on your mobile phone and catch this kind of trade. If you find this video helpful and understanding, don't forget to subscribe and like, and also share to your friends who is using mobile phone to analyze their charts.